Oh, I just wanted to reach out and say thank you so much to our government and Mr. Jerome Powell for punishing all of us in real estate. Yep, let's see, you jack the rates down, you jack the rates up. We officially at 8%. Everybody is freaked out. The market is becoming frozen. And on top of that, the reason why you guys are raising interest rates is not because the housing market, it's because you just gave away too much damn money to everybody, to businesses, to people, all these industries. And now because of your mistakes, we get to sit here and suffer. So we just wanted to, from all the real estate community, thank you so much for making our life harder than it has to be. Anyways, welcome back, everybody. Another episode of The Brief. This is your one and only Kenny. Yes, my voice. It sounds like I became a smoker over the weekend, but I was in a real estate event, and when I go to events, for some reason, I literally lose my voice, and this is actually better. But anyways, unfortunately, you're going to have to put up with it, but I gave a nice shout out there to our government and to our feds because you have officially hit 8%, and you have officially squeezed this real estate market to where you've made it for buyers and sellers so freaked out to do anything that nobody wants to do anything. Not even to mention the commercial market is worse. So once again, it's amazing how we just count on this federal government to lead us through these crises, but they're the ones that actually are putting us in crises. So if we would have gone back to June of 2021, and when inflation already is at 5.2, you guys should have hit the brakes, had some serious conversation, but it was your decision. And you guys said this is transitory and you just kept hitting the gas. And here we are. So hate to be Mr. Doom and Gloom a little bit, but we got to give this shout out because as I was at this conference, it's not that everybody's doom and gloom. It's that we really realize that at 8%, it's really making it impossible for people to buy. It's really making people doubt themselves, have trust in the market, have trust in us advisors, have trust in the government. And so we're all losing trust. And this isn't a political thing. This is just a reality thing that every, Republicans, Democrats, and independents, y'all are guilty because y'all gave away all this money that we all didn't need. And you guys just overkilled it. And now we're stuck with this. But there are some good news. There is some light at the end of the tunnel. So don't give me just yet, but it is challenging to see my friends and associates and all the people in the real estate market we're getting completely punished. And no, we will not get a bailout. No, we will not. We will not get a handout. No, we will not. And some of you might be saying, wow, Kenny, you guys made all this money in the last few years. But I understand that. But what you guys have to understand is the real estate market or any business, when you're fracturing this much and businesses are talking about a 30% or 50% or 70% less in income, they have to fire people and cut people. And that's really hard to operate any business because I would love anybody to call me and says, hey, I can operate at a 50 or 7% less margin with the team and all these people. So it's really hard because the pendulum will swing back and you got to rehire. So it's just a very difficult time for the real estate industry, especially for buyers and stuff. And also is who do you trust? Who do you believe? And I want to get more into that today. So anyways, without further ado, let's get into our inventory. Oh, did you guys hear that? Oh, because good. There really is no inventory. We're about flat. Yeah, San Diego. We got 546 last week. Now we're at 554. And then nationally, San Diego last week, where are you? We're at 3054. Now we're at 3110. New is 446. Recent sales, 363. Impending, 387. Still terrible numbers. Oh, forgot to mention, guys, this is also the brief as well. Krystle is sick, so she's not going to be able to record this week. So I'm going to give you some love with the commercial. So don't worry about it. But this week, we're going to go more into where would all that money go, the stimulus, because I want to know. So I was looking at it. I got it right over here. Look. We got this coming up. The COVID money tracker. Let's see. $6 trillion. Woo! It's a lot of money. Remember, the whole $6 trillion, they could almost bought the entire housing market. They could have bought the entire housing market in Florida and then another state. Not here in California because it's $10 trillion. But so let's talk about the 10-year treasury. This morning, it hit actually 5% and hung around there. And as I shoot this Monday, it's 4.852. So definitely seeing a pullback. I can tell you one thing. That stock market, when it hits 5, it does not like it at all. It is like, I'm going to have a sell-off, No. So clearly the market does not like 5. I'm not saying it likes anything less, but I don't know what to say about it. It just doesn't like it. The market sells off. So you're going to hit 5. You're going to have the stock market sell off. But what I want to talk about is the Feds have not raised rates for a while. People, I think November's off the table, and they're talking about maybe December. I know we're getting all this inflation talk and all this stuff. I don't really care because at this point, I don't trust the Feds. Nobody trusts the Feds. I think they're completely wrong. I definitely can tell you right now, from the real estate perspective, you went way too far from a business owner. You went way too far from consumers. You went way too far. Everybody's getting punished with these high rates because you want to slow down the economy. But the federal government is still giving stimulus out in these programs and stuff. So if we really understood the stimulus and how much money is still getting baked out there into it, it's not helping. So when are we going to cut that spigot off? It's like, when are we actually going to cut the spigots off that are giving people money that don't need it to support them? And it's causing a lot of issues. So we really understand that. But the 10-year treasury hit 5. It's about 487. But, they're not hiking because a couple of things, even though you're seeing the data come out a little stronger, is when the Feds hiked last time, they did not project the 10-year treasury to hit this high, nor I don't really think they like 5. It's freaking them out. The builders and everybody else is definitely nailing them to chill out on it. But regardless, it doesn't make the 10-year treasury doing the work. When the 10-year treasury goes from 4% to 5, that's like raising the prime rate another 100 basis points. So you can clearly see it in real estate. The last 2-3 weeks, it literally we're going to a slow stop here. Like, it went from people might want to buy to people say, hell no, I'm not doing anything in this rate environment, because they're very concerned of what's coming next. Are we going to have a recession? Am I going to have a job? So these high rates, it creates a lot of uncertainty, insecurity with people. And so that is a huge, huge problem. Also, the thing I've been talking about lately is this pain with the small business community. If you had an SBA 7A loan or any floating rate debt, you maybe got a line of credit or this, those rates could have been in the 3s, the 4s. Now you're double, if not more. So I'm talking to people that have rates in the, mid 9s all the way to 11, and they are getting crushed. So there's a lot of small business owners that took out, I don't know the SBA, but I looked, I think, maybe $100 billion of loans. That's going to affect a lot of small business owners. When I talk to them, they're like, Kenny, if I can't get this resolved, I might have to shut down my business. I'm definitely going to have to lay off people. They're obviously on the personal side, they're having to cut back. So this is really just having a tremendous effect, all these high rates. The big businesses can handle a little bit better, but we will see as this pain continues as we go through it. What's on the docket this week? We've got home sales, pending home sales, initial jobless claims, PCE is what the Feds look at. We got a lot of data. We'll see what happens, but it doesn't seem to move the needle. We really need that 10-year treasury to chill out. The oversold treasury bond market, whatever you want to call it, I think that market's out of whack. Hopefully we get some pullback, because rates at this level is really going to freeze the housing market and make it even more challenging for first-time home buyers, because that's our biggest buyer. Cash-out refis. Who in the world is doing a cash-out refi? Well, you'd be surprised. Cash-out refis are on the rise. So if you're going from a 3, a 4%, and you got to get locked into a 7 or 8%, people go, why in the world would you do that? Remember, everybody, when you walk into the car dealership and you walk out, you care about what? The car you bought? Yes. Do you care about how much you bought it for? No. Do you care about the rate? No. What do you care about is every month you write that monthly check, or you ACH it out, however you pay it, you care about the payment. With housing, yes, the purchase price, there's the down payment, there's the rate, there's this payment. Everybody cares about the payment. As I tell people for 20 years, if I can give you a 0% rate and you can't afford the payment, it doesn't matter, because you can't afford the payment. So people care about payment. So why would somebody do a cash out refi? Well, somebody might have lost a job, or the business is suffering, or for many other reasons they racked up debt, whatever it is, they need to consolidate. So maybe their house payment's $3,000, but their consumer debt's $2,000. It's crushing them, or more. So maybe they just want to say, you know what, I'm going to consolidate, and now my payment will go from $3,000 to $4,000. They save $1,000, and maybe take some cash out to put in the bank just to make sure they're good. And they know there's going to be that refi opportunity coming up. So if you or anybody's in the thinking that you have this debt and you're not getting any better and you're worried about this stuff, that's why you do a cash out refi. Nobody wants to go get a cash out refi when they don't have a job and they're racked up on credit card debt. So yes, guys, some people are getting behind. It's hard to live. Somebody in the house lost a job. They're racking the credit card. They need the help. That's why you do the cash out refi. Does it make sense for everybody? No. Would it make sense for some people? Absolutely. Yes. And a lot of people are like, I disagree. This is crazy. But with that being said, We can't always agree on everything. This is their financial situation. Yeah, you said you shouldn't have got into it, but you don't know their circumstance. You don't know what happened to them. There's 300 million plus people in this country. Shit happens to people every day, and they have to deal with it. And so if they can tap an equity in their house, they're going to do it. So the biggest question in today's market is used to be, what are interest rates going to do? That's really not anymore, because interest rates are out of control. We don't know what the Fed's going to do. He's leaving us with minimal confidence because he doesn't want to say which direction he's going to go in case things change. Is, should I buy now or should I wait? And let's just think about it this way. We're all locked up for the pandemic. And when we came out, did you think hotels are going to be more or less? Did you think airlines were going to be more or less? My point is, because of this lockup, because of this frozenness and all the frozen inventory and all the free and clear properties by the older folks, congrats, there's first-time home buyers and you want to buy. How many first-time home buyers do you think are going to come off the market into buying a home when rates come down? It is going to be out of control. There is going to be so much pent up demand, just like when we were locked up. It is going to cause a lot of problems, because you have to factor in, do you really think there's going to be that much inventory to meet that much demand? I don't know. I hope there is, because if it's not, it is going to be a shit show in some of these markets, and people are just not going to be able to get in. There's going to be a line of buyers to buy, and people are going to have to overpay. Is that going to happen for sure? I don't know. But the consensus on the street with everything I see and everything I read is yes, maybe real estate prices could dip or this, but those buyers are going to come in strong. And when rates remain lower, you're going to get more and more and more. And we're talking millions and millions and millions of buyers, whether they're trading up and keeping their house, whether they're renting and coming in the market. It is out of control. So if you are thinking of sitting on the fence, just remember, it's just like supply demand. You're going to get a ton of demand. Hopefully the supply meets it. If it doesn't, you will probably be glad you bought a house with an 8% rate and you're locked in at this home price, because when everybody else is buying, you will be refinancing and not dealing with all the stress. That's it. But if you want to talk about it, you have questions about it, just reach out to me. I'm here to help. Sellers are having one of the biggest problems. I was reading this article this morning. It's pretty interesting. The guy was talking about how sellers are stuck in their homes and they're also stuck in their jobs. And you're like, what are you talking about? So many people, they locked in that good rate, they're stuck, but they're also stuck in their job. Maybe it would move and they can't because their job is close. Also, why they're stuck is when we were locked in and we came out. What was the opportunity? Well, the opportunity was finally to get free, go eat, go live your life, go to Vegas, go to Europe, get on a plane, get some hotels, rent a VRBO, have all that fun. But also what you got is all these job openings open up, and a lot of people are moving around jobs, and you got that job offer, you got that bonus, you got that raise, and you're stuck at the job because maybe you're not happy, maybe you don't like it, but maybe you have a bonus that you have to stay there, maybe you have a really good pay and you can't go anywhere else, and you're kind of just stuck. So sellers are stuck with job and this, and I think it's fascinating. And as we continue to move forward, I wonder if we're going to see more and more of this, where people are just not going to give up that house and they're not going to give up that job because they're in a pretty good place. I was thinking about this over the weekend when I was at this real estate event. We were talking about, human nature and who people are and how we make decisions. And we've come to a pivotal point in this real estate market where it's kind of not fun. It's not fun to maybe invest. It's not fun to buy. It's not fun when rates are 8%. And it's not fun when things don't make sense. It's hard to run your business. But for the consumer, it's not fun because you have somebody that's renting, their rents are going up, they have money, they want to buy, but they don't know who to trust. And we're talking about trust is a pain point for so many people. You might have had somebody you trust give you advice, they screwed you over. You might have had a friend screw you over. You might have had somebody steal money from you. You might have money that borrowed never paid you back. You might have trusted a boss or a girlfriend or a family member, and it didn't work out. And so you are like me or many other people, you have to now verify and vet, and you might not trust people as much as you were when you were younger as you got older. And so you're supposed to trust this news article, trust this economist, trust this agent, trust this lender to say, should I buy a house now? Is this really the best time? And it's hard, right? And you don't know where to get your intel. You don't know who to trust. And so what I would say is trust the data, watch the numbers, because it's very simple. If you're sitting on the sidelines because you don't trust anything, you don't even trust if you're going to have a job, you might just be sitting there saying, I'm going to rent and wait this out. But you also, if you're in a spot where you're like, I've got a great job, I've got the income, I can afford the higher rates, I just don't know if the market's going to crash. I just don't know if I trust all this stuff. Just trust the data. So if you're sitting back watching, if you see inventory spike, maybe that's an opportunity to pick off a deal. But what I would say is this: if you know what you want your payment to be and you know what house you're looking for and things are sitting on the market, well, trust yourself. Trust the process to say, hey, maybe that house that's $1 million, I can get it for 900 because it's sitting there. Maybe that seller's desperate. Maybe there's a divorce. Maybe there's a death. Maybe somebody needs to move, but why not learn the data, trust yourself, and just use your lender, your agent, advisors, economic people around you to just keep you up with the relevant data and stuff. Instead of it giving us our opinion, why don't you form an opinion based on your own beliefs, your gut, and what you're reading? So then that way you make a really informative decision that you believe and you trust is the right way, whether that's a lender or the agent helping you make that. So I hope for people, they can stop listening to the news, stop listening to their neighbors, stop listening to people that really shouldn't be giving you an opinion. I think you should just look at the data and see what the data says. And the data only says the way we're going to have massive housing inventory is probably a gnarly recession with a massive job loss recession where people are flight to cash. And if you think that's going to happen, then you should definitely wait to buy then. And if it doesn't happen, it is what it is. You'll just have to deal with the lower rates and the more demand. So last but not least, guys, I don't want to spend too much time, but I wanted to pull up this article, which it's going to be put on the screen because I'm not going to be looking at you on camera, but I was looking, I'm like, where did all the money go? So I got this money tracker. How much is this really right? Who knows? But there is a total of, so COVID response, it says Federal Reserve. Okay, you ready? Are you sitting down? The Federal Reserve said it was going to spend up to 7.15 trillion. It's spent up to 4.17 trillion. Where did that go? They purchased, let's go through it quickly. They purchased long-term treasuries, mortgage-backed securities, which they're getting rid of now. They helped repo markets where banks lend to lend banks, short-term facility lending. So there was another $2 trillion there. They gave $800 billion to the Payment Protection Program, another $141 billion in other lending facilities. So that's how you spend $4.7 trillion. The legislative, $6.15 trillion. So it's $1.56 trillion went to the payment, broken up between the Payment Protection Program, economic injury disaster loans, airline support, grants for restaurants, federal support, grants for shuttered venues, state small business credit incentive, U.S. Postal Service loans, small business SBA, just tons of money. Let's see here. Trump administration, $605 billion, tax policy, health spending, income support. So basically, when I look at this, they said they're going to spend $6 trillion. They spent $5.83 trillion plus $4.7 trillion. It's $10 trillion, guys. That was my point. $10 trillion we gave out to the people, to the businesses, to so many different things when we got locked in. $10 trillion. And we keep raising rates. That money is landed so many places. And so many people have sold businesses, bought businesses, sold house. There is so many people sitting on so much cash that if things get cheap or there's opportunity, they're going to come right back in. So the rich will get richer. But this $10 trillion probably went right up to the rich and really helped them out. While a lot of you people are sitting here, getting hammered with the high rents, the costs and all that. And it's not really helping anybody else. So I just want to point out how much money went into the economy, and we really have to be careful about trusting our government, our Federal Reserves. If they really have our best interest at hand, do they really have to spend that much money? And also, they're still continuing to give out money in some of these programs? It's still happening. Why? Why so much further? As you are the consumer, the person, how have you not got out there, got a job, and recovered by now? It's been so many years. So I think we really need to stop and think about we cannot keep giving out debt like this, because we're going to be going through these volatile times. Because if things get bad, they just print more money. We're going to push asset prices up more. The rich will get richer, and people that don't have assets are going to get left behind. It just causes more and more problems and instability in the marketplace. And as we sit here with 8% rates and we're getting crushed, it's just because there's bad decisions by a lot of different people in the government to bail out money. I understand in the beginning we should have bailed out, but we really, after 2021, we should have cut that stuff off and let people go back to work, live their lives, and not have this inflation so crazy with all these asset prices. But we're here and there's nothing we can do about it now. It's very important the knowledge of how much money we did spend, if that thing is actually correct. That means $10 trillion or something between all these programs went in. It's crazy, and they still want to keep spending more money as we go on roads and stuff, and I get it, but that's stimulus. Thank you again. This is probably a little bit longer one, but I appreciate you guys watching. You're just dealing with my voice. I'm a little bit tired, a little bit run down, but I still want to give you the love, give you the brief, give you the scoop. I'll see you guys next week. We'll watch the data. We'll keep watching the reserve. The Federal Reserve really is all over the place. It's really hard. There's no point to comment on them because I don't even think they know what they want to do at this point in time. So we'll sit back and watch. Till next week. Hey, share this with somebody. If you need me, reach out. Look forward to helping you guys with anything at all. And remember, we got your back. Don't hesitate to call with any questions. Thanks so much.